So you got ThinkOrSwim, but you're not sure which indicators you want to use. Well, this video should be able to help you out. So what we're going to do is we're going to go to the little beaker or hour, whatever the heck that thing is. We're going to click on it, and we're going to start with standard deviation channel. We're going to click two of those. The first one is going to be a 1. And we're gonna leave that color for now, and then that's a 2, and we're gonna make the 2 whatever color you want. I'm gonna choose this purplish color for the upper and for the lower, and I believe that's all we need to do. We're gonna take the middle one on the second, and I believe we're gonna make that. We will go with this blue and apply. Let's see what that looks like. It's been a minute since I've done these. So that works. So what these are standard deviation channel lines, and this blue line is our median line, the center line, and most of the time price action is gonna be around that center line. As you get further out, this is one standard deviation to the upside, two standard deviations to the upside. Anything beyond that, there's just over a 4% chance that it's ever going to be there. 96% of the time, the price action is going to be between these lines. So this is the center. This is one standard deviation to the downside and two standard deviations to the downside. So even if you had no other indicators and you just traded off of this, which Tesla's not a good example because Tesla's been extremely bullish for a long time now, but we'll go with Snap. Let's try it. Okay, so Snap, if you just said every time the price gets two standard deviations to one way, like downside or upside, I'm going to go long or short. So if you got in right here at 2091 with a dollar stop, you didn't get stopped out, and you took profits, some profits, my recommendation would be taking profits, a little bit of profits every standard deviation. That just statistically, that'll help you. In hindsight, we can see that the price went from outside of the second, two deviations to the downside to outside of two deviations to the upside. So, if we would have known this before, that'd be awesome. But nobody knows what a stock's going to do. We can only speculate. And, through due diligence and technical analysis, we can have a better odds of being right. So, if you just wanted to stick with one, my advice would be standard deviation one. Especially if you're a swing trader, or just getting started out. But we are going to remove that. It's just drawing ahead. And then we're going to go auto here. So another thing too is when I started with TOS, I didn't realize that I had these settings here. I had like fit patterns and fit studies, all this, and my charts would be like really, like, it'd be annoying. Like I'd have to zoom out and then like adjust things, like just to be able to navigate to my charts. But now with all these unclicked, which that's just, I can't unclick that, but I can zoom, or I can scroll and zoom and stuff, and I don't have to, the price action just kind of stays in the picture the whole time, which really helps. And I didn't realize this for about 3 months of trading, and I just couldn't understand how TOS was so frustrating. But that was my newbie fault. So that's that. The second indicators we're going to work with are going to be the exponential moving averages. So we go here, and we go exp, moving average exponential 1. Click 1, you gotta double click it. Then we're gonna go 2, and then we're going to go simple moving average. So let's go to simple moving average. Make this 200. This is kind of tricky here. You gotta takes a couple times sometimes, but SMA. I like to make this red. Okay, so simple moving average is similar to an exponential moving average, except that the exponential moving average is updated on a more frequent basis. So it's going to reflect the price action, the current price action more. Like simple moving average is a slower moving average. So it's for like the longer time frames. Personally, I find them more useful. So that's why I have the 200 as the simple moving average, and the rest are going to be exponential. So here, a lot of people start with a 9. I like an 8, and I go with this red first. Just personal preference. And then this one, a lot of people do 20. I do 21. The reason why is because I was taught, one of my mentors, actually two of them, use these numbers because they're based on Fibonacci extensions, or they're some sort of Fibonacci link to these numbers. So I'm not a mathematician. I don't go into all the details. I just blindly followed what they were saying, and then I blindly followed what they were saying is in regards to simple moving averages and strategy. One of my edges, and then many, 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 many hours, days, weeks, months of having seed time, and I started putting together one edge, and then another edge, and another, and I'm cool with 3. I really only use 2. Sometimes I use my third one, but and then sometimes I'll swing. But my bread and butter is 1 to 2 every day, 2 different edges. I'll go into those in more detail later, but first things first. So we have the 21, and we're going to color it. Let's go with this peach color. Cool. Okay. And then the 34. Now okay, I need to get another one. The reason why we have these 3. There we go. Hello. I'm like a freaking senior citizen sometimes on this computer. So the 34 is similar to the 50. Again, with the Fibonacci stuff. So this is why I'm using this. And I make the 34 white. So we hit apply. And now we have these lines. Now, in my experience, my first few months, seeing all these lines and the way they move in the chart, like sometimes they'll be bunched together, like here. Sometimes, the 34 will be above the 21 and the 8, and vice versa. And that was confusing to me for a while. But what you're going to want to pay attention to is where the price action, where the candles are in relation to these different EMAs. So the AEMA, because we're on the 1 minute, we're on the 30-minute time frame, so that would so let's go to the 1 minute. Now, and this works on any time frame. Like the different EMAs on different time frames. This is 34 minutes average price at this moment. So we know that the average is going down because of the way this 34 is facing down. Same thing with the 8 and the 21. 8 and the 21. So we can go back to the 30, and the the average price 30 minutes ago was, or is right here in 30 minutes, is 8. Sorry, I'm totally spacing out right now. This is the 8 moving average. So this is a price in the last 8 candles at this moment. Last 8 candles at this moment. So it gives you an idea of the average price, and then you see where the price is, where the candles are, compared to the last 8-minute average price, 21 and 34. Now 34 for me personally, if the like, let's go to the 1 minute. If, like, right here, price is, this is below, it's below the 34, it gets above it. It's below the 34. This is downtrending. When it gets above the 34 right here and holds, this is, that's a good indicator. Like, in my head, I'm going, okay, this is long. Well, honestly, I'm going to be checking. I look at the 1 minute chart as well as the 5 minute, 15 minute, hourly, 4 hour, and daily. For one of my strategies where I short pops and I buy, like extreme, like 7 red candles in a row, and we're at support. I'm going long, even in red candles. I start averaging in. I'll get one ad, maybe 100 shares, and then another 100 shares, and then that third one, because I know the way I set my trades up, that I have a high probability of being right. And I know I'm only willing to lose X amount of dollars based on the chart setup. So that third ad I will do, so I'll do 100, 100, and then 200. So 112 risk, and that's how I do it, and I have a high probability of success with this method because I did a lot of back testing on it, and I traded a lot with it. So I would, just based off this 1 minute, this is all I had here. The direction looks bullish to me now. So we're above the 34, and then we start getting below it, and then now it's looking to the downside. Well, we get back above it here, and I would cut my position if it broke above the 34. So I use that sometimes as a stop loss, sometimes as an area to add. Like it bounced off the 34 right here. If I was watching this at the moment, I was already in the position, I would get in, or if I wasn't, I could get in. I mean, I would add, and I could get in if I wasn't. But another thing is, you want to see a lot of volume. So right here, this is no volume. This is like 3,800, shares. Like, it's just nothing. Like some of these. So you got to be careful with volume like that. There's a lot of, you'll learn with trading. There's a lot of traps, like liquidity traps, and you get in. Market makers are just moving price action along, shaking out, collecting stop losses, like basically pickpocketing retail traders. So that's something that you'll learn, and hopefully not through by learning the hard way, because that's not fun. So we have those 3 EMAs. Now we want to add something that's very popular. See, the EMAs that we have, that other traders have, we want all, we want as many people to be on the same page as we are, because if a bunch of other people are buying right here, that means this candle is going to go up, and I'm going to be able to get in and take this ride too. There's going to be volume and liquidity there, and that's what we want. So we're going to go to VWAP, right? And we hit VWAP, and I color this one purple. It's actually default to purple. That's the one. And I get rid of these upper bands and lower bands, because we have the standard deviations indicator here already, and I don't really get into the view. It's too much on the chart. So VWAP, yeah, we have it there, and I make this one dashed, and that's it. Okay, apply. So there's a VWAP. That's a volume weighted average price. So how I use the VWAP, if the price is below the VWAP, my mindset, my bias is going to be to the short side in general. As long as the volume's good, do it. It's under the 34, you know. But so let's say I'm short right here. A lot of times, like here, it didn't really happen, but kind of did here. But yeah, so it'll the price action will get below the VWAP and it'll come and test it. And that's a lot of people get shaken off of the trade like that. If they go short and then it's like, oh, it's going to go, you know, and then they get out, which is, you know, something that, you know, a newbie will do. But once you get, you know, you get stopped out enough times, you're like, I don't want to do that anymore because that hurt, you know. And that's one of the reasons why I'm doing these videos, is to hopefully get through to some people so they don't have to learn some of the lessons that I had to learn the hard way. Because it's not fun, you know, like thousands and thousands of dollars down the drain when I would have been better off had I known, you know, before I made those mistakes, what I was getting myself into. So we have VWAP, we have the EMAs, we have the standard deviations. That is all I would recommend if you're just starting out. My actual charts have a little bit more. This is something that I'll explain in a further video, but these are the market internals. So we have the ES S&P 500 futures. So this is like what all your large cap stocks are going to be reacting to. Like when this is going up, so are a lot of your mega cap, large cap stocks. They're also going up, and they're going down when this is going down too. It's like the wind. Think of the S&P 500 or the ES futures, and the market in general as the wind. So if other stocks like Amazon, Tesla, Apple are dropping quickly, then you better bet that BA or Nvidia is going to be dropping a little bit too. You know, it's going to have an effect on it. You know, somewhat, and sometimes more often than others. So this is the tick. I'll explain this in another video, but what I wanted to show you was my indicators. So I know I said, you know, less is more, but I'm used to this setting, and you know, after many, you know, over a year of just, you know, using this, I've been completely used to it. But what we have here is, so these are you know, I wouldn't worry about this now because it's just too much to take on at once, but these are pivot points, and this is a yesterday's high, then I have the solid ones, yesterday's low, this is a previous day close. Those are important lines to have. So let me give you that one to do, because you want to have previous day. Go there, go here, and you go previous high, and you make it whatever color you want. You want the blue solid, yesterday's high, yesterday's low. We'll do the blue. We'll do this one solid. We'll do this one dashed, and then yesterday's low is there. Yesterday's close. Let's do pink solid 2 width. That's what I do. And then previous open, I don't show this one. It just doesn't. It's too much information, I feel, to have on a chart. So you know that when you're trading this stock, a lot of times it'll bounce off the previous day close, or they'll go to yesterday's highs, or they'll go to yesterday's low. I mean, or if it's, you know, really going to test, it'll go to yesterday's lows. You know, it depends. So those are levels that you can say, okay, if I see buyers stepping in, if I want to go long and I see buyers stepping in at yesterday's close or yesterday's highs or whatever, then I'm gonna, depending on what, you know, how the chart's set up, you know, what your first target, like what's closest. So if you see buyers come in, then you know it's, you should be, you know, have a high probability of succeeding in the trade, depending on how far you're trying to go with it. But that's stuff that comes with time. You know, it took me realistically, it took me 6 months, maybe 8 months of every day, you know, 12 hours a day of working on trading and trying to, you know, just learn as much as I can. I've since I started this, I've been every day 12 to 16 hours a day going over charts and watching videos and that's why I'm trying to make these videos, gear them towards newcomers and novices, because there's a lot of videos out there that don't cover the like I don't know, I wish I would have seen the videos that I'm going to be making, because yeah, I want to help people, so that they don't go through the same mess that I went through, you know. And maybe it's unavoidable, I'm not sure, but I'm going to give it my best shot and try to help as many people as I can. And honestly, hopefully also generate some extra income, like just from getting clicks and ad revenue. Like, hey, it will. I'm a firm believer that will help. I'm helping people, and then that will also help my mindset, because when when I started trading, I was selling on eBay a lot, and I was making like 500 to 1,000 bucks, grossing 500 to $1,000 a day, sometimes more. And then when coronavirus hit, and after a few months, everybody was like realized, hey, we're not getting off lockdown soon. My eBay just dried up, and couldn't get any merchandise from my sources like I could before, and it was a mess. So um, my mind, my psychological, like, you know health was not very good when that happened. Like I would start the trading day and I would get a little bit red before I would have some positions swinging in like ThinkOrSwim, and then I used light speed for my executions. Like, here's an level 2 options uh, window, but light speed's good, but they're expensive, and if I kind of wish I would have started off with light speed a little bit later than I did, because I lost a few $1,000s in commissions and fees, learning, and it was and it took me a lot longer, I feel. But and look, some days, like a lot of days, um, my red days aren't big anymore, really. Like, not too often, knock on wood. But just on a Monday, like, I take it slow on a Monday, and I'm up 183 bucks in light speed, just little trades on Monday, like nothing big. It's about quality, not quantity, in my opinion. And, and then ThinkOrSwim, 92 bucks, swinging some options. Um, was up more, but that's not the name of the game. I mean, you're gonna have, especially with options, you're gonna have, you're gonna be up, bigly, and then all of a sudden, you get the IV crush, and your money's gone. It's not in your pocket anymore. So you got to deal with that. But so we are yeah. So that that was a little some wins there, but so we have the open eye, low close. So I kind of like lost track when we're, oh, here's the light speed window. Let me just close this out. Light speed charts, though, that's the one thing that people complain a lot about their charts, but I honestly don't mind when I use when I do my strategy where I'm shorting the pops. So let's look at like when I'm okay, I had a horrible entry and exit here. This was not good. Yeah, it was here. I got short here, took profits too quick, bought this dip down here, took profits. Um, you know, we're talking, a little bit of money. I made like 80 something bucks on this trade, these two trades. It wasn't anything to write home about, but that was within the first 15 minutes. Like I'm like really. You got to be careful in the first 15 minutes. Think of it like a garden hose, and on the water, and there's a kink in it. You let the kink out. That's when, like, when the market opens. That's basically what's happening, and all that water is just spraying everywhere. It's like, you know, so it's in like a lot of pressure. So like a fire hose going off. It's a lot to handle, and it's like trying to walk across the freeway when you're 5 years old, without getting hit by a car, basically. Because in the market, you got people moving millions and billions of dollars worth of shares on the dark web, on the in the dark pools, and you don't even know it. And nobody knows about it until sometimes the next day. They have 24 hours to post those trades, so the moves are happening, but you don't know about it. So you can get hit with a like by a train, basically, freight train, and have no idea. Like, you can look at the level two, and these are the sellers, these are the buyers, but there's also hidden buyers. Like my order entry here, I can do 4,000 shares here. I can only show 100. I can show zero. Nobody can see me in here, but I got 4,000. I got 400,000. You know, if I had that many, I could be selling 400,000 at this price right here, or wherever I wanted to position myself. But so you gotta watch out for stuff like that. But as you progress in trading, you're gonna learn how to, like, duck and dive. As long as I mean, considering that you survive long enough to do that. Not most people aren't gonna survive long enough to figure that out, and so that's why it's important to proceed with caution. I would. You don't want to live in fear, though, too much. Because that does hinder progress. Did for me a lot, but what I would recommend is paper trading for 2 to 4 weeks, at least, up to 3 months. Ideally, it would be 30 to 90 days paper trading, but if you're like me, I couldn't wait that long. I did jump in, and I was buying like 100 or 500 or 1,000 shares of a $15 stock, and that was I would win like $600 on a trade or whatever, and then win like 1,200 on a trade, and then give back like 600, and then I had like a $2,800 loss, and it just spooked me. And then following that $2,800 loss, I had like 3 months of straight just red days, like pretty much every day. I was just like defeated, and I didn't realize it. So one day, I woke up and I was like, I can't do this anymore. Like, I have to change something. Like, I was trying to change things every day, but I finally said I'm gonna size down. And then that same week, I had an aha moment, and I realized, like, some things clicked for me in trading. Like, all of a sudden, and this was about 8 months in, all of a sudden, I had I had this. I was able to see. It was like, all of a sudden I had vision. Like, I could understand, like, where, because what would happen is I would see this 1 minute chart, or let me close this out. I would see this 1 minute chart, and I would get tunnel vision. When, but now I'm looking at the daily. Okay, when we start, I'm looking at the daily, see where we're at. 4 hour, 15 minute, or hour, depending on, a lot of times I have the 15 minute set up here, but um, and I have a clear picture of where we're at, where, you know, where are we going? Where does it look like we're going? Where do we have a high probability of going? I don't know what the price action is going to do, but I know that right here, we have a pretty good. There's a pretty good chance that if I see buyers stepping in here, we're going to be going up. And if not, I know I can get out without a lot of loss. So the thing that I started learning was if I take good risk reward setups, then that's what I get. Good risk reward setups. But you have to be able to, this takes time and it takes money because you're gonna have to lose money. But if you start by sizing down to when I started sizing down, I the first day I bought one share of Tesla when Tesla was at like 2,000 or like $1,000. So I bought one share of Tesla to start, and then bought another one and another one. I'd average into my positions. Amazon, I was buying like one. They were like 200 bucks or something like that, or 1,500 bucks, I think. But and then I worked on that for a while, and then I moved up from there. But just don't be in a hurry to try to get money. I have a friend that trades, and we chat every day, and he's always concerned about making money, and he's a good trader, but I'm over here just being the worrywart, trying to tell him, like, man, just don't focus on the money, just focus on trading well. If you just try to trade well, just forget about the money. I can take 25 shares of a $500 stock, or 100 shares of a $3 stock, $5 stock, and get a good trade out of it, and make enough money to be content for the day. Because the alternative, if I get into a position that's too big and I get emotional and I can't handle those emotions, then I'm going to take a big loss. I mean, it's more probable that will happen. So that's my advice regarding that. And then when when you know how to trade, when you got some time in the seat, and you're sized down and you're just focusing on trading well, the money comes. Like, it really does. And then you'll know when you've proven yourself and you can step up. You can size up. Like, I went from 25 shares to 50, and starting with 2 shares of Tesla, and then I'd go 2, 2, 5. I'm a big firm believer in that. Up to 3 initial buy-in, and then 2 more buys, and so you can get a good average price in. But one thing to realize, and I didn't realize this when I first started trading, was that there's most brokers are set up with FIFO, first in, first out. So if I buy 100 shares a Snap at $22, and then I buy 100 shares at $23, and I sell, and I have 200 shares, I sell 100, I'm at 25, then I made 400 bucks. The ones that, how this would come back to bite you is, if you bought at 25 and then you bought at 24, and then you sell at 25.01, thinking that you're getting your average price, or what you sell it at minus your average price. So you think you're gonna make money, but you're not. Like, I was in purple, and I had, when COVID-19 hit, I bought it at like $15, and then I bought like another 100 shares at like 12, and then 100 at 9, and I kept averaging down, and then I sold. So the first ones I had were 15. It's first in, first out, so like 14.97 or whatever, and then I sold it like 6.50, just because I was like, well, I want to take some profits. I got a really good average. I had like an average of like, my average was, it was like 6.50 or something. It was like $9 I was gonna take, and all of a sudden, boom! I had negative $800 on the sale, and I was like, what the heck just happened? and then that's how I learned. So, um, and well, I realized that, and then I learned about it like a month later, and then my broker at the time was E-Trade, and they told me that if I would have told them at the time, they could have done it before it cleared, because it takes a couple of days for option. I mean, for uh, trades to clear. So in hindsight, it would have been nice, but I think I'm gonna cut the video there. But I just wanted to go over some basic um, indicator setups, and I stick to the basics, and these are indicators that I use. Everything I showed you, um, minus the pivot points, is here. I also have the 89, but that's for the purposes of this video. That's not really necessary to worry about for now, if you're just starting out. And I mean, you don't even need it. I don't even use that one that often. But sometimes I'll find the price will bounce there, and I'll use it, but I wouldn't worry about it. So thank you for watching this video. This is actually my first YouTube video that I've recorded. I got a new microphone. I'm just gonna vlog and put out educational videos, not to get a chat room that get followers and have people follow me and then I dump on them. Like, I'm not doing anything like that. I just want to help some people and generate hopefully some passive income. So thank you for taking the time to check me out. I appreciate it, and I hope you have a great day, and I hope you have a green day trading. Thank you.